Question 1. Topic: Premiums and proceeds. To 45-year-old applicant is purchasing a term life insurance policy. Which of the following factors is most likely to increase the premium amount? A. The applicant is a non-smoker. B. The applicant has a hazardous occupation such as construction work. C. The applicant is in excellent health based on the medical exam results. D. The applicant chooses an annual premium payment mode. Answer: B. The applicant has a hazardous occupation such as construction work. Explanation: hazardous occupations pose a higher risk to the insurer, which will result in higher premiums. The risk classification process considers factors like the applicant's occupation, lifestyle, and health. While non-smokers and individuals in excellent health are usually placed in preferred or standard risk categories, resulting in low premiums, those engaged in hazardous occupations are considered substandard risks, leading to higher premiums. Choosing an annual payment mode does not increase the premium and may even reduce it due to fewer administrative costs. Relevant regulation. Georgia law on risk classification allows insurers to assess premiums based on the applicant's health, occupation, and other risk factors. Question 2. Scenario-based topic: underwriting and policy issue. Mr. Rodriguez, a 50-year-old applicant, is applying for a term life insurance policy. During the application process, he fails to disclose a recent diagnosis of high blood pressure. His medical examination report, however, reveals this condition to the insurer. What should the insurer do based on this information? A. Reject the application due to misrepresentation. B. Issue the policy but with a higher premium due to his health condition. C. Issue the policy at the standard rate as the insurer discovered the condition through the medical examination. D. Cancel the policy after issuance without refunding any premiums. Answer: B. Issue the policy but with a higher premium due to his health condition. Explanation: in cases where the applicant fails to disclose a material health condition, the insurer may choose to classify the applicant as a higher risk and adjust the premium accordingly. Since the condition was discovered through the medical exam and not completely concealed, this is not a case of fraud, but it does impact the risk classification. Therefore, the insurer is likely to issue the policy at a higher premium substandard risk. Misrepresentation would apply if the insurer had no way of discovering the condition. Cancelling the policy without a refund would only apply if there was intentional fraud, which is not the case here. Relevant regulation. Under Georgia insurance laws, insurers use medical exams and reports to classify risk and adjust premiums accordingly. Question 3. Topic: claims and policy surrender. In Georgia, if an insured dies 8 months after purchasing a term life insurance policy, which of the following would most likely prevent the insurer from denying the death claim? A. The insured had misstated their age by 2 years. B. The insured committed fraud during the application process. C. The insured committed suicide 7 months after purchasing the policy. D. The insurer failed to conduct a medical exam before issuing the policy. Answer: A. The insured had misstated their age by 2 years. Explanation: misstatement of age is a common error, but it does not typically invalidate the policy. Instead, the insurer adjusts the death benefit to reflect the accurate age and the corresponding premium. If the insured had misstated their age, the benefit payout would be adjusted, but the claim would still be honored. Suicide within the first 2 years of a policy may invoke the suicide clause, and fraud discovered within the contestability period, usually the first 2 years, could void the policy. The failure to conduct a medical exam is the insurer's choice and does not typically prevent claim payouts unless the insurer can prove fraud or material misrepresentation. Relevant regulation. Georgia's incontestability clause protects the policyholder after 2 years, but certain errors like misstatement of age are specifically addressed with adjustments rather than denial. Question 4. Topic: riders and endorsements. Which of the following riders on a term life insurance policy provides an additional benefit if the insured dies due to a covered accident? A. Waiver of premium rider. B. Return of premium rider. C. Accidental death benefit rider. D. Accelerated death benefit rider. Answer: C. Accidental death benefit rider. Explanation: the accidental death benefit rider pays an additional benefit, typically equal to the face amount of the policy if the insured dies as a result of a covered accident. This rider is commonly known as a double indemnity. The waiver of premium rider covers premium payments if the insured becomes disabled, while the return of premium rider returns a portion of premiums if the policyholder outlives the term of the policy. The accelerated death benefit rider allows access to part of the death benefit while still alive, usually in cases of terminal illness. Relevant regulation. In Georgia, insurers are allowed to offer various riders, including accidental death riders, to increase coverage flexibility. Question 5. Topic: Georgia insurance laws and regulations. Licensing requirements. Which of the following is required for an individual to obtain a resident insurance producer license in Georgia? A. Must have been a Georgia resident for at least 5 years. B. Must pass a written examination specific to the line of insurance. C. Must have prior insurance experience with another insurance company. D. Must apply directly through a federal licensing body. Answer: B. Must pass a written examination specific to the line of insurance. Explanation: to obtain a resident insurance producer license in Georgia, applicants must pass a state-administered written examination tailored to the type of insurance they wish to sell. E.g. life insurance, property, casualty. There is no requirement for residency duration beyond being a legal resident of Georgia. Previous insurance experience is not mandatory, and licenses are issued by the Georgia Insurance Department, not a federal body. A relevant regulation. Georgia Insurance Code Section 3323 outlines the licensing process, including the requirement to pass a written exam. Question 6. Scenario-based topic: policy provisions, options, and riders. Ms. Thompson has a term life insurance policy and recently designated her son as the primary beneficiary and her sister as the contingent beneficiary. If Ms. Thompson passes away and her son predeceased her, what will happen to the death benefit? A. The death benefit will be paid to her sister, the contingent beneficiary. B. The death benefit will be divided between her son's children. C. The death benefit will revert back to the insurer since the primary beneficiary predeceased the policyholder. D. The policy will be invalid and no death benefit will be paid out. Answer: A. The death benefit will be paid to her sister, the contingent beneficiary. Explanation: in this scenario, the contingent beneficiary, Ms. Thompson's sister, would receive the death benefit because the primary beneficiary, her son, predeceased the insured. A contingent beneficiary receives the proceeds if the primary beneficiary is no longer alive at the time of the insured's death. The death benefit would not be distributed to the primary beneficiary's heirs unless the policy specifies a per stirps designation. Relevant regulation. Georgia law recognizes primary and contingent beneficiaries as defined in policy contracts, with contingent beneficiaries receiving proceeds if the primary is unavailable. Question 7. Topic: Georgia-specific regulations for life insurance. Replacement rules. Which of the following best describes the agent's responsibility during a replacement transaction in Georgia? A. The agent must notify the current insurer that the client intends to replace their policy. B. The agent must provide a signed notice to the applicant explaining the potential disadvantages of replacing the policy. C. The agent must ensure that the new policy has a higher premium than the current one. D. The agent must inform the Georgia Insurance Guarantee Association about the replacement. Answer: B. The agent must provide a signed notice to the applicant explaining the potential disadvantages of replacing the policy. Explanation: in Georgia, when replacing an insurance policy, the agent must provide the applicant with a signed notice that outlines the potential risks and disadvantages of replacing the existing policy, such as loss of benefits or higher costs. This ensures that the client makes an informed decision. The agent is not required to notify the current insurer directly or involve the Georgia Insurance Guarantee Association. Relevant regulation. Georgia's insurance laws under oath. C. GA SS 332445 outline the duties of agents in replacement transactions, including providing clients with necessary disclosures. Question 8. Topic: types of life insurance policies. Which of the following best describes a decreasing term life insurance policy? A. The premium increases over time while the coverage remains level. B. The coverage amount decreases over time while the premium remains level. C. Both the premium and the coverage amount increase over time. D. The coverage amount decreases as the premium increases. Answer: B. The coverage amount decreases over time while the premium remains level. Explanation: a decreasing term life insurance policy features a death benefit that decreases over time while the premium remains constant. This type of policy is often used to cover a specific liability, such as a mortgage, that decreases as time goes on. The premium does not increase, making it more affordable compared to other forms of coverage. Relevant regulation. Under Georgia insurance laws, insurers are allowed to offer decreasing term policies, which are typically structured to match declining financial obligations. Question 9. Topic: Georgia insurance laws and regulations. Agent responsibilities. Which of the following is considered a fiduciary responsibility of a licensed insurance agent in Georgia? A. Ensuring clients purchase the most expensive policy available. B. Handling premium funds in a manner that prioritizes the client's interests. C. Recommending only policies with high commissions for the agent. D. Encouraging clients to purchase unnecessary riders to increase coverage. Answer: B. Handling premium funds in a manner that prioritizes the client's interests. Explanation: a fiduciary responsibility means that the agent must act in the best interests of the client, which includes properly managing and handling premium funds on behalf of the client. This responsibility involves ensuring the funds are used for their intended purpose and not for personal gain. Encouraging unnecessary purchases or selecting products based on commissions violates the fiduciary duty to act in the client's best interest. Relevant regulation: the Georgia Insurance Code holds insurance agents to a fiduciary standard, requiring them to prioritize their clients' needs and handle funds ethically. Question 10. Topic: Claims and policy surrender. In Georgia, which of the following is a valid reason for an insurer to contest a life insurance claim within the contestability period? A. The insured died of natural causes. B. The insured misstated their age on the application. C. The insured committed fraud during the application process. D. The insured had a health condition that was unknown to both the insurer and the insured. Answer: C. The insured committed fraud during the application process. Explanation: if the insurer discovers that the insured committed fraud during the application process, such as deliberately providing false information about their health or financial status, the insurer can contest the claim during the contestability period, which is typically 2 years from the policy's effective date. Misstatement of age would not result in claim denial, but rather an adjustment of the death benefit. Natural death and unknown health conditions are not valid grounds for contesting the claim if no fraud was involved. Relevant regulation: under Georgia law, life insurance policies include the contestability period, during which insurers can investigate and potentially deny claims based on fraud or material misrepresentation. Question 11. Topic: Whole life insurance policy provisions. Which of the following is a characteristic of whole life insurance policies? A. Premiums increase over time as the insured gets older. B. The policy accumulates cash value and provides lifetime coverage. C. The coverage decreases over time while the premiums remain constant. D. The death benefit is only paid if the insured dies within a specified term. Answer: B. The policy accumulates cash value and provides lifetime coverage. Explanation: whole life insurance provides coverage for the insured's entire life as long as premiums are paid. It also accumulates cash value over time, which can be borrowed against or withdrawn. The premiums are fixed and do not increase as the insured ages. A relevant regulation: whole life policies must follow Georgia insurance laws regarding cash value accumulation and non-forfeiture benefits. Question 12. Topic: Georgia Insurance Department. Enforcement and penalties. In Georgia, if an agent is found guilty of committing a fraudulent insurance act, which of the following actions can the insurance commissioner take? A. The commissioner may impose a fine of up to $500 and no further penalties. B. The commissioner may suspend or revoke the agent's license and impose monetary penalties. C. The commissioner may require the agent to take a continuing education course, but no suspension or revocation. D. The commissioner cannot take any action against the agent without a court order. Answer: B. The commissioner may suspend or revoke the agent's license and impose monetary penalties. Explanation: the Georgia Insurance Commissioner has the authority to suspend or revoke an agent's license if the agent is found guilty of fraud or any other serious violation of insurance laws. Additionally, the commissioner can impose fines and other penalties. Relevant regulation: Georgia Code C. GA SS 3329 outlines the enforcement powers of the insurance commissioner, including penalties for fraud. Question 13. Topic: Georgia life insurance. Free look period. How long is the free look period for life insurance policies in Georgia, during which the policyholder can cancel the policy for a full refund? A. 10 days. B. 15 days. C. 20 days. D. 30 days. Answer: 8. 10 days. Explanation: in Georgia, the free look period for life insurance policies is 10 days from the date the policy is delivered. During this period, the policyholder can cancel the policy for any reason and receive a full refund of all premiums paid. Relevant regulation: Georgia Code requires insurers to provide a free look period of at least 10 days for life insurance policies. Question 14. Topic: Life insurance policy loans. Which of the following statements about policy loans on a whole life insurance policy is correct? A. Policy loans must be repaid within 5 years or the policy will lapse. B. The policyholder can borrow up to the full cash value of the policy. C. Policy loans are interest-free. D. If a policyholder dies with an outstanding loan, the death benefit is reduced by the loan amount plus interest. Answer: D. If a policyholder dies with an outstanding loan, the death benefit is reduced by the loan amount plus interest. Explanation: when a policyholder takes a loan against the cash value of a whole life policy, any outstanding loan amount, including accrued interest, will be deducted from the death benefit if the policyholder dies before the loan is repaid. Policy loans are not interest-free, and while there is no strict repayment schedule, unpaid loans accrue interest. Relevant regulation: Georgia laws allow policyholders to borrow against the cash value of their life insurance policies. Question 15. Topic: Annuities. Which type of annuity guarantees the same periodic payment for the life of the annuitant, regardless of how long they live? A. Fixed period annuity. B. Fixed annuity. C. Life annuity. D. Deferred annuity. Answer: C. Life annuity. Explanation: a life annuity guarantees periodic payments for the annuitant's lifetime, regardless of how long they live. This type of annuity provides financial security for individuals concerned about outliving their assets. Fixed-period annuities provide payments for a set period, and deferred annuities begin payments at a future date. Relevant regulation: Georgia annuity regulations ensure consumer protection and fair practices for life annuities. Question 16. Scenario-based topic: Group life insurance. Maria's employer provides her with a group life insurance policy as part of her benefits package. Maria decides to leave her job after 10 years. What are her options regarding a group life insurance coverage? A. She must forfeit the coverage when she leaves the job. B. She can convert her group life insurance into an individual policy within a specified time. C. She can keep the group coverage indefinitely, but will have to pay double the premium. D. She can transfer the policy to her new employer. Answer: B. She could convert her group life insurance into an individual policy within a specified time. Explanation: most group life insurance policies offer a conversion option, allowing the insured to convert their group coverage into an individual life insurance policy when they leave their employer. This option typically must be exercised within a specific time frame, usually 31 days. Relevant regulation: Georgia law requires group life insurance policies to include conversion provisions. Question 17. Topic: Policy non-forfeiture options. Which of the following is not a non-forfeiture option for a life insurance policy? A. Reduced paid-up insurance. B. Cash surrender value. C. Extended term insurance. D. Lump sum death benefit. Answer: D. Lump sum death benefit. Explanation: the lump sum death benefit is not a non-forfeiture option. It is a standard payout option upon the death of the insured. Non-forfeiture options allow a policyholder to receive some value from their life insurance policy if they stop paying premiums, such as taking the cash surrender value or converting the policy to reduced paid-up or extended term insurance. Relevant regulation: Georgia's insurance regulations require that life insurance policies offer non-forfeiture benefits to policyholders. Question 18. Topic: Georgia regulations on rebating. In Georgia, which of the following is considered an illegal rebating practice? A. Offering a client a discount on their premium in exchange for purchasing multiple policies. B. Offering a client a free promotional item with the company's logo worth $5. C. Providing a client with free policyholder services, such as annual policy reviews. D. Giving a client a credit towards future premiums as a reward for referring new customers. Answer: D. Giving a client a credit towards future premiums as a reward for referring new customers. Explanation: in Georgia, rebating laws prohibit offering clients any inducements, such as credits or rebates, to purchase or maintain an insurance policy. Offering premium credits as a reward for customer referrals is considered rebating and is illegal. However, small promotional items with minimal value or services related to the policy are permitted. Relevant regulation CGA SS 336-4 prohibits rebating and outlines the penalties for violations. Question 19. Topic: Georgia life insurance beneficiary designations. Which of the following can prevent a beneficiary from receiving the death benefit from a life insurance policy in Georgia? A. The beneficiary predeceased the insured and no contingent beneficiary was named. B. The beneficiary lives in another state. C. The beneficiary is a minor at the time of the insured's death. D. The beneficiary is an organization rather than an individual. Answer A. The beneficiary predeceased the insured and no contingent beneficiary was named. Explanation: if the primary beneficiary predeceases the insured and no contingent beneficiary is named, the death benefit may not be paid to the intended recipient. In such cases, the benefit typically goes to the insured's estate. The other options, out of state beneficiary, minor beneficiary, organization, or beneficiary, do not prevent payment, though special arrangements may be needed. Relevant regulation: Georgia law allows policyholders to designate any legal entity or individual as a beneficiary. Question 20. Topic: Life insurance. Contestability period. During the contestability period, which of the following reasons would allow an insurer in Georgia to deny a life insurance claim? A. The insured died from a pre-existing condition that was not disclosed on the application. B. The insured died in an accident not covered by the policy. C. The insured misstated their occupation on the application. D. The insured missed 2 consecutive premium payments. Answer A. The insured died from a pre-existing condition that was not disclosed on the application. Explanation: during the contestability period, the insurer has the right to investigate and deny a claim if it discovers that the insured provided inaccurate or incomplete information during the application process, such as failing to disclose a pre-existing medical condition. The insurer cannot deny the claim solely because of a missed premium payment or non-coverage for an accidental death. Relevant regulation: Georgia law allows life insurers to investigate claims during the contestability period, typically 2 years from the policy's inception. Question 21. Topic: Georgia workers' compensation insurance. Which of the following employees would not be covered under Georgia's workers' compensation laws? A. An office worker employed by a company with 3 employees. B. A part-time employee working for a company with 5 employees. C. A full-time construction worker employed by a company with 15 employees. D. A seasonal agricultural worker employed by a farm with 6 employees. Answer A. An office worker employed by a company with 3 employees. Explanation: Georgia law requires workers' compensation coverage for employers with 3 or more employees. If a company has fewer than 3 employees, it is not required to provide workers' compensation insurance. Seasonal agricultural workers, part-time employees, and full-time employees in larger businesses are covered. Relevant regulation OC/GA SS 3492 outlines the requirements for workers' compensation coverage in Georgia. Question 22. Topic: Auto insurance. Georgia state minimum requirements. What is the minimum liability coverage required by Georgia law for auto insurance policies? A. $15,000 per person for bodily injury, $30,000 per accident, and $5,000 for property damage. B. $25,000 per person for bodily injury, $50,000 per accident, and $25,000 for property damage. C. $30,000 per person for bodily injury, $60,000 per accident, and $10,000 for property damage. D. $50,000 per person for bodily injury, $100,000 per accident, and $50,000 for property damage. Answer B. $25,000 per person for bodily injury, $50,000 per accident, and $25,000 for property damage. Explanation: Georgia requires a minimum of $25,000 per person for bodily injury, $50,000 per accident for bodily injury, and $25,000 for property damage. This ensures basic financial protection in case of auto accidents. Relevant regulation OC/GA SS 33711 requires these minimum auto insurance liability limits. Question 23. Topic: Health insurance. Georgia continuation coverage law. Which of the following describes Georgia's state continuation coverage law for health insurance? A. It allows employees to continue group health coverage for up to 6 months after employment ends. B. It allows employees to continue group health coverage for up to 12 months after employment ends. C. It applies only to companies with 100 or more employees. D. It does not apply if the employee is eligible for COBRA coverage. Answer A. It allows employees to continue group health coverage for up to 6 months after employment ends. Explanation: Georgia's state continuation coverage law, often referred to as Mini COBRA, allows employees to continue their group health coverage for up to 6 months after employment ends as long as they are not eligible for COBRA or Medicare. Relevant regulation T GA SS332421.1 outlines the state continuation coverage law for health insurance. Question 24. Scenario-based topic: Georgia homeowners insurance. If James' home in Georgia is damaged in a storm, but he has a standard homeowners insurance policy, what should he expect regarding coverage for repairs? A. His insurance will cover the full cost of repairs regardless of policy limits. B. His insurance will only cover repairs up to the policy's dwelling coverage limit minus any deductible. C. His insurance will cover all repair costs but only if he provides receipts for every item. D. His insurance will not cover storm damage unless he purchased flood insurance. Answer: B. His insurance will only cover repairs up to the policy's dwelling coverage limit minus any deductible. Explanation: a standard homeowners insurance policy will cover repairs for storm damage up to the policy's dwelling coverage limit minus any applicable deductible. Flood damage is only covered by a separate flood insurance policy. Relevant regulation: Georgia law requires homeowners insurance policies to clearly state coverage limits and deductibles for various types of damage. Question 25. Topic: Georgia insurance licensing requirements. Which of the following is required for an individual to obtain an insurance agent license in Georgia? A. Must be at least 21 years old. B. Must complete pre-licensing education and pass the state licensing exam. C. Must have a minimum of 2 years of insurance experience. D. Must complete a 6-month internship with a licensed agent. Answer: B. Must complete pre-licensing education and pass the state licensing exam. Explanation: to obtain an insurance agent license in Georgia, individuals must complete the required pre-licensing education and pass the state licensing exam. There is no internship requirement and the minimum age is 18, not 21. Relevant regulation OCGA SS33235 outlines the licensing requirements for insurance agents in Georgia. Question 26. Topic: Georgia Insurance Guarantee Association. What is the purpose of the Georgia Life and Health Insurance Guarantee Association? A. To prevent insurance companies from going bankrupt. B. To regulate premium rates charged by insurance companies. C. To pay claims if a member insurance company becomes insolvent. D. To offer free health insurance to low-income residents. Answer: C. To pay claims if a member insurance company becomes insolvent. Explanation: the Georgia Life and Health Insurance Guarantee Association provides protection to policyholders by paying claims if a member insurer becomes insolvent. It acts as a safety net for policyholders if their insurance company fails. Relevant regulation OCGA SS33382 establishes the Georgia Life and Health Insurance Guarantee Association. Question 27. Topic: Georgia insurance policy cancellation laws. How much advance notice must an insurer give before cancelling a personal auto insurance policy for non-payment in Georgia? A. 5 days. B. 10 days. C. 15 days. D. 30 days. Answer: B. 10 days. Explanation: in Georgia, an insurer must provide at least 10 days advance notice before cancelling a personal auto insurance policy for non-payment of premiums. Relevant regulation OCGA SS332444 outlines the notice requirements for insurance policy cancellations in Georgia. Question 28. Topic: Georgia health insurance. Pre-existing conditions. Under Georgia law, which of the following is true regarding coverage for pre-existing conditions in health insurance policies? A. Insurers may exclude coverage for pre-existing conditions for up to 12 months. B. Insurers may permanently deny coverage for pre-existing conditions. C. Pre-existing conditions must be covered without waiting periods. D. Insurers may impose a waiting period of up to 90 days for pre-existing conditions. Answer: C. Pre-existing conditions must be covered without waiting periods. Explanation: under the Affordable Care Act, which Georgia follows, health insurance plans are required to cover pre-existing conditions without imposing waiting periods or exclusions. Relevant regulation: the ACA applies nationwide, and Georgia insurers must comply with these federal rules regarding pre-existing conditions. Question 29. Topic: Georgia Business Owners Policy. BOP. Which of the following is typically covered under business owners policy (BOP) in Georgia? A. Employee health insurance. B. Workers' compensation. C. Property damage and liability for small businesses. D. Professional liability for attorneys and doctors. Answer: C. Property damage and liability for small businesses. Explanation: a business owner's policy (BOP) typically provides coverage for property damage and liability for small businesses. It is a bundled policy that does not cover workers' compensation or professional liability. Relevant regulation: Georgia small businesses can purchase BOPS for comprehensive coverage under a single policy. Question 30. Scenario-based topic: Georgia disability insurance. Lily has a short-term disability insurance policy through her employer in Georgia. After a serious injury, she is unable to work for 2 months. What will her short-term disability policy likely cover? A. 100% of her pre-disability income for the full 2 months. B. A percentage of her pre-disability income for the duration of her disability. C. Only medical expenses related to the injury. D. A lump sum payment for her injury. Answer: B. The percentage of her pre-disability income for the duration of her disability. Explanation: short-term disability insurance typically covers a percentage, usually 50-70%, of the insured's pre-disability income for a specified period while they are unable to work. It does not provide 100% income replacement or lump sum payments. Relevant regulation: Georgia law requires employers who offer disability insurance to clearly define coverage and benefits in the policy.